Sydney, Reuters, oil prices were supported around a 2-1/2-year top on Wednesday after an explosion of a Libyan crude pipeline sparked supply fears while gold and copper hovered near multi-week highs, boosting commodity and energy-linked shares around Asia. Trading was generally thin across the board in a holiday-shortened week. MISCI Euro Trademark's broadest index of Asia-Pacific shares outside Japan. MIUP J0000 plus edged up 0.1% to the highest since late November. For the year so far, the index has added 31.6%. The rally in oil and metals prices helped Asian stocks overcome overnight losses on Wall Street led by a tumble in Apple Inc., AAPLO. Australian shares advanced 0.3% on Wednesday to a near-decade high of 6,092.8 points, with materials and energy sectors leading gains. Mining giant BHP Billiton, BHP.AX, was among the top gainers on the index, followed by Woodside Petroleum, WPL.AX, and gold miner Newcrest, NCM.AX. Japan's Nikkei.N225 was up 0.1%. U.S. crude touched $60 a barrel after armed assailants blew up a pipeline pumping crude oil to the port of Sidr on Tuesday. O/R. Brent crude LCOC1, the international benchmark for oil prices, settled at $67.02 a barrel. U.S. crude CLC1 was off 18 cents at $59.79 a barrel after going as far as $60.01, a peak not seen since mid-2015. Gold climbed to $1,283.70 an ounce, the highest since early December, while copper CMCU3 surged to $7,139, a level last visited around mid-October. A Euro/If1 is holding a long position in Brent, U.S. crude, heating oil, copper, aluminum, or silver, or exposed to these commodities through equity, then your Christmas has just been extended a little longer, a Euro, said Chris Weston, Melbourne-based chief market strategist at IG. A Euro/If supply-demand equation continues to favor ongoing support for the barrel and further plays into one of the big macro dynamics for 2018. That being a slow, yet steady rise in inflation and price pressures. A Euro. Price pressures. Inflation has remained elusive in 2017 despite a pickup in global growth, puzzling policymakers around the world. But several economists have predicted the return of inflationary pressures in 2018, which would help central banks wind down years of super easy policies and hike interest rates. The U.S. Federal Reserve raised rates 3 times this year and is set to deliver further hikes in 2018. The European Central Bank is expected to finally begin clawing back its monetary stimulus and tighten policy after keeping the deposit rate below zero since 2014. The ECB has pledged to continue buying bonds at least until September. But with economic growth in the Eurozone on its best run in a decade and inflation comfortably above 1%, it is widely expected to wind down the program thereafter. In forex markets, trading was thin with most major currencies muted. The euro/EUR equals held at $1.1857 and the dollar JPY equals was barely changed at 113.19 yen. For the year, the dollar index.DXY, which measures the greenback against other major currencies, is seen ending about 9% lower. It is down about 3% on the yen this year. JPY equals. The euro, the Aussie AUD equals and the British pound GBP equals are among the best performing major currencies this year.